Good afternoon. This is Todd Horwitz coming here from the floor of the CME Group in Chicago. And as we continue to watch gold, and what are we seeing here? What we're seeing, is it going to be a breakout, or are we going to have a disappointment again? And this is the torture and the pattern of a consolidation that continues to churn back and forth. And as we said last week, it looks like we have seen a higher low made. So now we're taking a run at the tops, and that would be we would need a close over 1365 to confirm a move higher. I think that what you're looking at here is a market that is kind of torn and really just working back and forth in these ranges. And you look at all of the reasons why it can go down. You can look at all the reasons why it can go up, which is exactly why this consolidation pattern exists. I think when you see what we have, what we would call an ascending pattern, which basically means over the last 2 weeks, we've continued to make higher lows and higher highs, pushing us up towards that resistance. That is more of an indication that the market wants to break to the upside. Now, again, we could still get a major dose of disappointment. This pattern could fail, as many of them do over time. But at the end of the day, when you look at what's going on with the dollar, when you look at what's going on with the economy, and if you look at the bond market, there was a lot of reaching for some of these fear assets, gold being one of them. So it would be no surprise if we broke out the upside, but it's really very precarious when we look at this position that we're in right now, that you really want, instead of buying it in front of the resistance, what you'd really like to look for is a market that would break above 1365, pull back to that support and hold, and then we would say that gold would be a buy. Right now, we're still in this major congestion pattern, and until it breaks above it or stays back and goes back down to the lower end, we would remain more neutral here as we watch the metals go here. But at the end of the day, it looks a little bit bullish. Everything looks solid. But again, I think buying here is not the right trade. I think more here you want to observe the market, look for a better opportunity. And again, break out above 1365, a pullback to that level, that would signify a buy. Until then, we'll watch. But right now, we would certainly not be a seller because of the ascending pattern. So we'll be neutral and observe. That's the way I see it. This is Todd Horwitz coming to you from the floor of the CME Group in Chicago.